All right, so my next guest says that participants have succumbed to a different kind of groupthink. I want to bring in Jim Bianco, president of Bianco Research. Jim, you wrote, today, I fear we might be recreating the exact dynamic at digital speed. Millions of users generate daily AI briefings with near identical prompts fed into overlapping models, receiving essentially the same market summaries, signals, and conclusions. So what does that mean, though, for the average market, for the market and for the average participant?
Usually where you make your money in markets is having an outside of the box view. We refer to it in the markets as alpha, and that you go against the herd. And the problem is right now is we're kind of going back to where we were in the 50s. And I used the example in the 50s. Everybody woke up, and if you saw a picture of everybody commuting in to Wall Street, they were all reading the New York Times.
Like the man in the gray flannel suit, right? Everyone's on the train commuting. They all have on the same suit, the hat, and they're reading the same thing.
Right, and they all come to the same conclusion. Well, that's what digital briefings with AI is doing now. We're all putting in the same prompts. We're all coming to the same conclusions. So if you're willing to go against the grain, and by the way, everybody says they are, but they really don't.
Right.
There's a lot of money that can be made, but I do think that people are falling into this false sense of complacency that, oh, I got my digital briefing, it scanned 8 million different things, and it gave me some synopsis of what's happening in the world. Yeah, you and 9,000 other people. That's the problem.
My other problem, though, with some of these active managers is that they won't allow themselves to buy things that are really off the radar. Like if it's not in the S&P 500, those kind of things. And that's where amazing money has been made. The SanDisk of the world, you won't get it if you just do the sort of paint by numbers approach of Wall Street.
Yeah, you're exactly right, because a lot of active managers will box themselves in. They'll put constraints on it, like I can't go outside the index, or I'm very afraid of overvalued stocks. The problem with the recent market is the most overvalued stocks, like the Mag 7, are the ones that are going up the most.
Right.
And so they wind up falling behind in a market like this, especially when it's very concentrated, the rally.
So I got to ask you about then, I don't know groupthink or not, but tomorrow we're all thinking about SpaceX.
Right.
And it does appear that maybe there are two schools of thought. Morningstar came out and said that they think it's a $63 stock. Needless to say, they won't be invited to any Elon parties. I hope no one who works there ever gets in a Tesla again. On the other side of this, though, Susquehanna went through the numbers and said, you know what? We think that 1.77 trillion is valid, and that maybe there is a $28 trillion TAM. Where do you fall in on this?
I'd probably be closer to Susquehanna, but I would, use as the example that both things can be true at the same time. What happened when Facebook came out? First thing it did, stock went down 50%. What did it do after that? It went up 10x.
Right.
So it could be that there is a short-term hype in this stock, but I do think longer term, especially if Starship gets to its hope that it could produce you could take 1 kilogram for $100 and put it into space, then you could have a $28 trillion TAM if you could do that.
Now, the one thing, too, that Facebook people don't remember is that, they were going to go public at this level, at this much money, and they got a phone call, this is overhyped. They raise it again, and then they raise it. I mean, they really maximized, to their credit. Wall Street wanted them to maximize it. Don't leave anything on the table except the stock got hammered, to your point.
Right.
I got to ask you about Elon's compensation package.
What? It's just another guy making $1 trillion.
Listen, I'm loving it, but he may make more than that if he can pull this one off, right? So he's going to get 15 equal tranches of 66 million shares. All he's got to do is pass certain milestones like $1 trillion market cap, 1.52. Also, there's one other part to this. The company's got to establish a permanent human colony on Mars with at least 1 million inhabitants. That's called shooting for the stars right there.
Right. Well, you know what? If he could do that, if he could put 1 million people on Mars, he deserves $1 trillion.
I agree. I listen, and I'm rooting for him. I want to ask about, one of the things that there's some anxiety in this market about, and it's been around for a while, though, this sort of convoluted funding, Broadcom, it's just doing something back in debt for $36 billion with Anthropic. They brought in Apollo. Are you concerned about just this sort of circular financing that's going on with AI?
Actually, the circular financing is what's been boosting the market because everybody owns a piece of Anthropic, and Anthropic triples its valuation, and then they report it as other income going higher. No, because in new industries, if you look past time, there tends to be this circular financing, especially when something is being born, like a country coming out of war after World War II. You see a lot of that because there isn't any other financing. That's one of the reasons why these companies are going public. They need so much money for this AI build-out. They can't leave the public money on the table. They have to go get some of that too. Right. And so, no, at least at that point. Now, it could always be overdone.
Sure.
But the fact that they're just doing the circular financing in and of itself is not a problem.
And real quick, so China announced some things against America today. We're going to hold back some of their publicly traded companies because we think that, just part of the military apparatus. And you posted this chart, and I've talked about this a lot, sort of correlating the entry of China to the World Trade Organization. Look at this chart, folks. That dotted line right there, right under the S in despair, is when China was allowed into the World Trade Organization. And you can see, I guess that's a visual of hollowing out of America, of our home, of our heartland, of jobs disappearing, suicides went through the roof, drug-related deaths went through the roof. Alcoholism went through the roof. I'm really happy that you posted this. I don't think people understand. There's a lot of people, pure capitalists, who just don't care. Get the cheapest value you can get and go with it. But there's consequences to this stuff.
Absolutely. There's a lot of people that say that the globalization was a win. I guess it was a net win, but somebody paid a price. Right. And if you've been to Rockford, Illinois, or if some of those other former industrial places, Gary, Indiana, right, they paid a terrible price for this. And let's not forget that. My biggest complaint has been, you want to say, okay, look, this is forward progress, this is capitalism, creative destruction, fine. How about we do that with academia? How about we do that with Hollywood? How about we do that with law, with finance? Oh, no, we have to have rules against having those kind of changes go into those industries to allow that kind of change. But when it comes to manufacturing, anything's possible and everything goes, and we just look the other way, right, when we have these consequences.
Great stuff, Jim.